We manually integrate every single contract that is available through our API.
Having all this level of complexity to offer simplicity, do you think you are not introducing a new layer of risk?
As soon as you're adding additional smart contract into the equation, you're always adding risk.
DeFi wasn't as simple as before, quite accessible, user experience is better and better. Why I have to use as a wallet, as a neobank, Yield.xyz?
I would not be surprised if over the next year or two, we would see yield generation actually be taken on by an agent layer that sits on top of our API. I totally believe that ultimately any type of yield is going to be accessible through our API. It's all going to be on chain.
Bonjour et bienvenue dans cet épisode. Je suis Louis, CPTO chez Myriam. L'idée de ce format, c'est de vous proposer pendant une demi-heure ou peut-être un peu plus la vision d'un protocole, un peu un point d'étape de l'origine, le concept technique, les enjeux, la roadmap et comment s'impliquer et construire dans cet écosystème. Donc on est parti pour une demi-heure ensemble et bon visionnage. Welcome Serafin. It's a very real pleasure to have you with us today. So the idea with this format is to present and to give an overview on your project, what it is, what do you solve today, what is your ecosystem, and how do you help builders to use your product to solve blockchain or crypto needs with that. So that we will talk about eventually governance, if you want to launch a token, whatever, and the future of your project. So first to go in details, please introduce yourself.
Sure. My name is Serafin. I'm the founder and CEO of Yield.xyz. Until recently, we were known as StakeKit, and we are a yield infrastructure provider. So essentially, we make it easy for our clients to bring about 1,500 yields across more than 75 networks into their product. So wallets, dApps, neobanks, fintechs, etc. Instead of having to integrate each individual contract, they can just go to us. We provide an abstraction layer where we essentially decode intent of staking or deposit operations. We abstract away the complexity of actually dealing with the underlying contracts. We also provide our clients with everything that they need to service these yields end to end. So we have a very comprehensive metadata and yield API. We have a front end that you can deploy if you don't want to build your own UI. We have reporting infrastructure, revenue sharing infrastructure, fee taking infrastructure. So it's a very comprehensive product, but it's meant to be very plug and play. So complexity for the sake of simplicity. So we actually got started building a wallet ourselves. So we kind of knew what the requirements were on the builder side to integrate something like that. So we did that for about 2.5 years. It was a staking focused wallet. We initially called it Stake Wallet, like the actual stake. And we had like a 3D rotating stake in the background, which was an MP4. So if you were listening to like a podcast or to music, if you opened the app, it would actually shut down any other music and it would probably crash your phone. But yeah, we put that into the market. It became pretty popular. We ended up raising around for it. And then kind of like simultaneously, we had some other wallets asking us if they could use our staking infrastructure because we became known for that. Yeah, long story short, we split that up. We sold the wallet to Paxful or Ecobase, which is the holding company of Paxful, which is one of the largest BTC P2P marketplaces. Now with Yield.xyz, we are the largest yield aggregator in Web3.
Nice, very interesting. Wallet still exists?
Yeah, the wallet still exists.
Yeah.
So essentially, and this was actually pretty interesting because we initially got approached by a couple of centralized exchanges that wanted to buy the wallet. And to be frank, like to us, it made a lot of sense because if you think about it, a lot of the centralized infrastructure that we used like in the past is essentially just a way to, it's a quick fix for a more complex problem. The complex problem being that self-custody is just too hard, right? So custodying assets on customers' behalf is just a very quick way of solving the UX complexity of dealing with self-custody, right? So our hypothesis was that wallets would incrementally take over what centralized exchanges were offering. And to be frank, I think we're seeing some of that now with, for instance, like the announcement of Coinbase to bring DEX trading directly even into the centralized app.
All the big players are moving to DEX trading.
Correct. Yeah, and also the stack is getting better and better.
Yeah.
Right? So it's easier to essentially have the decentralized experience take over the centralized experience, which that's where it should be going, right? But yeah, the app still exists because we had a couple of centralized exchanges bidding for it, and then we also had Paxful or Ecobase bidding for it. They had a pretty cool use case because they're also a centralized player, but they wanted the wallet to be the advanced offering of their CeFi platform.
Okay.
And so essentially every user on the CeFi platform will now have a self-custodial wallet counterpart to their CeFi account. And we thought that was pretty compelling. So you can very easily move assets around from the centralized to the decentralized version. So yeah, it still exists, can still be downloaded, even if you're not a Paxful customer. So we're pretty excited.
Ah, nice. It's not you didn't get the
Correct.
product.
Correct.
It's nice exit.
Yeah.
On that. Let's talk about StakeKit. So I still say StakeKit, no Yield.xyz. Why is this move of StakeKit to Yield.xyz?
Yeah. So StakeKit was, to be frank, it was just a working title. It was like an internal project name. When we got started, that dates back to the time where we were still Stake Wallet, right? So StakeKit was embedded into Stake Wallet and powering the staking in Stake Wallet. And it was just a kind of like it was like a take on like Rainbow Kit, and other kind of like kits at the time. And we thought it was funny because if you said it fast enough, it sounded like StakeKit, right? So
yeah, it's
like
cool. I have a figure that all the time you succeed at having a very cool domain name.
Yeah.
Stake.it,
yeah.
Yield.xyz.
Yeah.
You're very good at that.
I appreciate it. Yeah, well, it's a little tongue in cheek, It's but we're extremely happy about this rebrand because the problem was with StakeKit, we started with staking, but we very quickly branched into DeFi yields, right? So even in Stake Wallet, I think it took us a couple of months to go from staking to actually DeFi yields. So as part of that, also StakeKit became a little bit more modular, right? It was not just staking, it was also DeFi yields that were embedded in this one API and were available in that one API. And so what we did with, we brought StakeKit to market as a separate product, still under the name of StakeKit. And we started to also serve DeFi use cases of our clients. But it was not really intuitive for them that we were able to actually solve DeFi use cases because we were called StakeKit, right? So
we had the same issue. By the past, the company was called Just Mining.
Yeah.
And we sell product that wasn't anymore mining, staking, masternodes, pods, and so on.
There you go.
So we know the story of having a name, not reflecting the activity.
Exactly, right? But it's also like, if it's a highly suggestive name, it's great in the period where you're doing just that. But as soon as you branch out, like, you're pigeonholing yourself in, right? So we waited quite a long time to find the right name. We had a couple of like different ideations, and we were actually waiting for one of the target domains to become available. So we officially only rebranded last week, but we're pretty excited because we cover about 1,300 DeFi yields on EVM and non-EVM. And it's really becoming kind of like a core part of our business because obviously right now stablecoin yields are really in the public eye. And we actually have probably among the most sophisticated vault infrastructures in Web3 to allow our clients to take fees, but also to do a little bit more, to just maybe to touch on this. So we call this optimized allocator vaults, or OAVs for short. And they essentially abstract away the complexity of dealing with DeFi yields. So DeFi yields are a little bit different, obviously, from the underlying mechanics compared to staking yields. How the yield is generated, etc., the types of contracts. But I think the biggest hurdle for DeFi yields is first and foremost liquidity fragmentation, right? So you have multiple different options of strategies for the same underlying token, right? So while you have like different flavors of ETH native staking and ETH pooled staking and liquid staking for ETH, right? There's like 100 different strategies that are available for USDC alone, right? So picking the right strategy is complex. Actually being able to route your token to where that strategy is on the particular network, etc., that is complex. And then actually dealing with the rewards is also complex because most of the time in DeFi, if it's a 6% quoted APY, you're actually getting a 4% base APY in USDC, and then you're getting 2% kind of like compound APY on top in incentive tokens, right?
And for end users, that's not the idea. They want to stake an easy way.
Correct.
Stake,
yeah.
Or
deposit.
Invest or deposit in an easy way and collect back when they want.
Correct.
Their initial money plus the rewards. They don't care about the tech company. They don't care about wrapping. They don't care about all that complexity.
Exactly. And to be frank, it's also a problem because if you get this 2% APY in incentive tokens, which are volatile, right? You are actually not really getting the APY that you're quoted. And that is a particular problem for neobanks, because if they go out there and advertise 6% APY, they're legally obligated to actually provide their customers with 6% APY, right? Otherwise, it opens up a can of worms of liability. And so our vault infrastructure automatically takes these incentive tokens whenever they're issued, off-ramps them back into the underlying deposit token. So, the incentive tokens go, for instance, back into USDC, and then they're reinvested. And that makes for a really smooth user experience because users exclusively earn yield in the underlying token. But it actually also allows us to calculate true APY, right, which is the APY the user will actually receive. So our clients can factually display the APY that users will earn. And then also it actually slightly boosts APY, just a little bit, but the incentive tokens don't compound, only the underlying token. And so if we take the incentive tokens, we off-ramp them and redeposit them, that compounds a little bit quicker, right? We're pretty excited about that. So we have more and more clients going for that. And so the rebrand, long tangent here, but the rebrand was kind of like in service of us communicating that it's not just staking, it's all yields that we cover.
If we do a step back on the product, I have a just simple question. Why I have to use as a wallet, as a neobank, why I have to use Yield.xyz instead of doing, honestly, you have DeFi available on Morpho, it's quite simple. You have that on AAV, you have that on DeFi wasn't as simple as before in 2025, quite accessible. User experience is better and better. Developer experience is better and better. Your API, you have the SDK and so on. Why go through your API? I think there is a cost to pay somewhere at some point.
Of course.
So what do you solve and what do you offer to customers?
Totally. The reason why you come to us is because it's everything that you need in order to actually service these yields end to end. So if you were, for instance, to manually integrate these different contracts, for one, you can't take any additional fees. So usually there is no rev share with DeFi protocols. In the validator kind of like staking ecosystem, rebates are pretty commonplace, but in DeFi protocols, it's very uncommon for there to be any rev share. So if you want to monetize these yields, you will need to have some sort of vault infrastructure that allows you to wrap the underlying strategies so that you can charge user-facing fees, such as deposit fees are somewhat easy to implement, but they're very unpopular because they immediately reduce the principal amount that the user invests. So you have to earn your way out of this hole that you find yourself in after the deposit fee was taken. So most of the time, our customers want to take performance fees. If you want to take performance fees, you have to have a very specialized vault infrastructure. Building that in-house is very complex, very costly. Maintaining that is even more costly. So that is kind of part one. If you then want to have something more sophisticated, such as automated routing of input tokens, which is another thing that our infrastructure does. So for instance, we can route assets that are actually on Ethereum, swap them for the ultimate deposit asset, then bridge that. So that's also taken on by our infrastructure. So you just get this very easy plug and play infrastructure from a deposit flow. Then again, sophisticated features such as off-ramping incentive tokens. We're the only platform in the market that has infrastructure for that particular use case. So you get a lot more. You don't have the liability of advertising a wrong APY. You don't have the complexity of actually having your users earn multiple tokens and build a convoluted UX around this. And you can immediately allow them to route tokens to wherever they need to go. Right?
It helps you to create on an easy way an extra revenue on top of your existing core business.
Exactly.
With ROI making sense instead of doing everything in-house. Or otherwise, I'm a big player with a big volume. And in that case, possibly makes sense. But
Correct. Also, the other thing is, DeFi is a lot more fast moving than staking, right?
Yeah.
So there are new strategies that are spun up virtually any other week, right? So and the APY changes in the underlying strategies. It's a lot more volatile than with staking, right? So what is a 10% APY this week might be a 5% APY the next week, right? So it's actually pretty critical for you to be able to spin up and connect to these new strategies as they become available if you want to offer your customers a competitive product. And so that's of course what we do. We immediately support any new vault as it becomes available. So you can immediately plug and play, right? I mean, it's as easy once you have our API deployed, it's as easy as switching that strategy on, like hitting a switch, that's it.
And what do you stop? You just connect the dots between users and providers, or are you in or are you moving to create your roles to do some custom strategy or to create some, so you say optimized vault? So to create some pre-configured optimized vault?
It's a great question. So we're not moving in the direction ourselves by manually becoming a risk curator ourselves or adding additional risk curators into the equation. A lot of the vaults that we have available to our API are already risk curated, right? But such as for instance with Morpho, with Gauntlet and Stakehouse, etc. Right? That being said, so we're working on a multi-strategy implementation of our OAV infrastructure, which essentially, right now it's one OAV that wraps one underlying strategy, right? So for instance, if you wanted to have the Gauntlet USDC Prime Vault on Base, our vault infrastructure would wrap that particular strategy. Then you can charge fees. The incentive tokens are automatically off-ramped, and you can have the routing into that particular vault be taken care of by our infrastructure. But you still have to add that particular strategy, right? You have to go in and say, you know what, actually I want to offer our clients that particular USDC vault. And then users have to opt in, right? Where we're going is allowing you to wrap multiple strategies into one vault. So imagine you have one deposit into one vault and it actually straddles all USDC strategies on Morpho. It also straddles all the strategies for USDC on Fluid, right? And Compound, etc.
Yeah.
Right? So it's like one vault that wraps all of them. And then we can have specific logic based upon which funds get distributed. So it could either be fixed weights, which we don't recommend, but that's one implementation, a very simplistic implementation. The other one is routing based upon changes in APY, right? And that's a little bit more complex because you need to do a multivariate analysis where you take a look at, of course, like, a hypothetical impact of a deposit on APY. So you need to understand what exactly the liquidity looks like in that particular pool, how liquidity will affect APY given a certain deposit, etc. So that's currently an audit, and we expect it to be available within the next month.
Okay. A couple of minutes ago, you talked about neobank, fintech, and I imagine needs are fully different between pure crypto player and fintech and neobank. We touch a point with stable coins wave growing day after day, especially coming from the US. Could you tell us a bit more the difference between customers you have now between yesterday with pure native staking, liquid staking stuff?
Totally. Yes, I mean, fintech is definitely, I'm not sure if it's eating Web3, but it's definitely expanding Web3, right? It's making it a lot more accessible. On the neobanking side in particular, I think what's very cool to see is neobanks add DeFi capabilities or like crypto capability into their products, right? So one of the companies that you were kind enough to introduce us to, and they were working together with is D-Block. And they have such a fascinating product because they're a fully regulated bank. It's a current account. And in the same app, you have an embedded self-custodial wallet, right? So you can actually move from crypto into fiat in the same app, super seamless. And now you can deploy it into multiple strategies that are powered by our vaults. And it's one click, right? You don't see any of the complexity of the routing. You're not getting any incentive tokens that you need to like manually manage, an off-ramp, etc. So it's just a super magical experience. And quite frankly, you're not giving up anything really. Like there's no extra degree of control that you're giving up. And to be honest, that's super cool to see. I think it's very encouraging to see because it is, I think in the past, there were a lot of like infrastructure projects that pushed on permission blockchains. And on permission blockchains, you needed to have dedicated deployments of specific like DeFi primitives. Most of the time, they would have like new protocols launch, etc. And so tons of liquidity fragmentation, tons of reinventing of the wheel, really disrupting what had been like years and years, like, half a decade plus in the making and what had been built. And it's cool to see that these neobanks are essentially adopting everything that had been built in real Web3, right? And that these are kind of like seamlessly merging. That's really awesome to see. In terms of like how they differ from our, Web3 native clients such as Ledger, I think for them, the abstraction capabilities are a lot more important just because they essentially need to provide a Web2 style user experience with Web3 infrastructure, right? So I think the tooling that they need to tap into needs to be really at the absolute, frontier, and it needs to be enterprise ready, right? And I think that is something that we particularly have been building towards for actually like 1.5, 2 years at this point in time, right? I think the reason why the neobanks give us the go at versus other providers in the industry is because we have built infrastructure at scale in Web3, servicing multiple million users per month. But at the same time, we also have that abstraction layer and we have that enterprise-ready infrastructure that allows for that abstraction, right? That really depends very heavily on pretty sophisticated data infrastructure. So we do a lot of indexing in-house. And actually, most of the indexing is done by us in-house. Essentially, we just have super accurate real-time data at the ready with custom endpoints that our customers might need to service this kind of like Web2 style user experience, right? So again, in terms of how they differ, I think it's really on the abstraction layer. And the abstraction layer really requires, coming back to what I said earlier, the complexity for sake of simplicity. I think that's really how we can service that, simplification, that abstraction component that they require in their products. And I think that's kind of like, more of the difference between these two customer cohorts, where Web3 native cohorts might be a little bit more accustomed because they've dealt with that over the past years. There was no other way with that degree of complexity and also allowing the users to fine-tune a lot of parameters. Neobanks are a lot more, plug and play. It needs to be enterprise ready. It needs to be, abstracted to a Web2 style user experience. To be frank, it's cool to see again how that is possible without really foregoing any of the degrees of control that you have in Web3 native applications.
We talk about complexity, simplicity, integration, wrapping, so i.e. smart contract. DeFi is quite difficult today in terms of security and crypto ecosystem also. Adding a layer of abstraction, adding wrapping of existing smart contract on top, having all this level of complexity to hide it to offer simplicity. Do you think you are not introducing a new layer of risk on top of that? And how do you mitigate that today?
Sure, definitely. As soon as you're adding additional smart contracts into the equation, you're always adding risk. That's endemic to the industry, right? But I think that ultimately what we do by means of natively integrating all these different underlying yields, we also remove a lot of risk, right? So to maybe touch on adding risk. So when we add smart contracts, we always add risk. What we do is we work with the best auditors in the industry to ensure that all of our vaults are,
Can you name it?
Of course, Zelig, Trail of Bits. Those are the two that we work together with on a frequent basis. And we get audits done in regular intervals, right? We have a super stringent QA process internally. And again, we've serviced 20 million plus, I think 25 million plus users over the last couple of months alone. Our infrastructure has scaled flawlessly. Any type of contract that we've deployed was, we've never had a single incident. Knock on wood. But of course, we need to have a lot of very, very good OPSEC practices. We need to have a very dedicated DevOps team, and auditing is critical. In terms of where we reduce risk, right? I think that's also an important component. We manually integrate every single contract that is available through our API ourselves. Right, so we actually go in, we take a look at the underlying contracts, we take a look at the audits, we do a full assessment of the underlying smart contracts, we go through a full flow of funds to understand where exactly the yield comes from, how it's generated. We have a very rigorous vetting process, and then we manually go in and add every single contract ourselves. And I think that's a huge de-risking component in this entire equation, because once we've added a contract and once we've vetted it and once it's available through our API and our clients can enable it, there's absolutely zero risk of any phishing for the end users, right? So while it's so commonplace that you get if you for instance want to go to Aave or to Compound or to Morpho or something like that, if you Google it or if you get sent a link or something like that, or if you follow a Twitter link, there is very little assurance that it's not a compromised link, right? Or that some sort of front end hasn't been compromised of any of these websites. And because the bar for actually compromising that is so much lower. And that is exactly something that we totally eradicate. If a client deploys our API and we have manually added the contracts, which again, all of our contracts are, we take away that entire risk of phishing and you interacting with compromised smart contracts or with outdated smart contracts. Or, to be frank, again, I talked about how we kind of decode intents. If a user, for instance, says, I want to stake, asset X, or I want to deposit, asset Y into vault Z. That entire that very simple request is deconstructed by us and actually put perfectly into the exact parameters and into the exact form that it needs to be passed on to the underlying contract. And so there's no risk for you to incorrectly interact with any of the underlying contracts. I think that's a huge factor where we de-risk interactions in Web3. So I think on the additional risk side, we work with the best institutions in the industry to mitigate any degree of risk. But again, adding smart contracts, of course, has an additional risk layer. But again, I think we remove an equal amount of risk from the equation, if not more, by natively integrating every single contract that is available through our API.
So today, as product, you sell this capability to connect the dots between people looking for yields and users looking for yield into an existing apps, exchange, wallets, whatever, and Morpho protocol, DeFi protocol, staking provider. But you also offer data layer to make this happen and track performances and so on. And you offer also all the complete developer experience. And I think it's a key differentiator from a lot of things, and especially in crypto ecosystem. We work with a lot of protocols. 90% of the time, we need to go on the GitHub account and to dig into the code because documentation is not up to date, documentation doesn't exist, and so on. How do you manage that developer experience? What do you offer? Details? Because I think it's one of the key differentiators to ease the onboarding, to ease the capability to convince more new apps and so on. And at the end of the day, to optimize the ROI, less time you spend on the development phase, more time you have to develop the business and your product.
Totally. I think the key piece in our developer experience, and we just released our API 2.0, where we simplified a lot of the kind of like core functionality even more, such that with very simple requests, you can immediately get all the yield opportunities for a particular input token, right? Or you can get all the validators for a specific network, or you can get the different available nodes for a particular validator very easily. So to be frank, I think from a usability perspective, just making the API very easy to understand is one. But I think also having the API be very complete and cover a lot of bases is equally important, right? And I think that is probably the key piece in what we offer, is that it's so complete, right? So if you need, for instance, so we had the use case, for instance, with Ledger, right? Where Ledger was building out this new earn dashboard. And as part of that, they wanted to have historic data for the different protocols that are supported through us and for the different staking integrations. So we actually re-indexed a lot of the protocols, a lot of the networks that were operating on, to provide them with historic data for all of the different, quite frankly, for all wallets that are active on that particular network. And so that was like custom work that we did in order to ensure that Ledger had what they needed, right? It's critical that a client, when they come to you, are able to get everything they need in order to service whatever the primary use case is that you're providing them with end to end. So if we, for instance, said, hey, we will just simply connect you, we'll have this intent decoding, if you will, infrastructure where you can easily interact with any underlying contract through like an abstracted API, if you will. If that was the only thing that we did, and then they had to go to Alchemy or to QuickNode or whoever else to tap into metadata to spin up RPCs, etc., right? That would be a problem. Like, we're introducing so much additional work, we're creating a lot of friction for our clients. So for the fact that it's like all in one, that it's totally plug and play, I think that's the kind of like key piece in developer experience.
Offering a one-stop shop is better in terms of ROI by offering just the yield generation layer. And make your decision for the data.
Exactly. And to be frank, to put this into perspective, a couple of our legacy clients that already had staking integrations, right? And maybe just to touch on this, we are the only validator agnostic platform in the space. So we work together with 30 plus of the best validators, such as Maria. And so our clients immediately are able to delegate to Maria nodes once they deploy our API. If we take a look at some of our legacy clients, like Web3 native clients that already had staking infrastructure, they were able to reduce the team size from 20 plus people that were just building dedicated integrations over and over again to a handful. I would say 1 PM with a couple of backend engineers, 2 to 3 backend engineers. And these other people are now able to actually really focus on the UX layer and just really focus on making this the best possible product outside of these staking integrations, right? Or outside of these DeFi integrations, etc. And they can easily scale to any network in no time, right? And I think that's kind of like a key piece. So I think, again, completeness is core. Ease of use is critical, and I think ultimately that will allow companies to very easily rally behind using this as a product and allowing their developers to do the things that really matter for the user experience, right? So that's what it kind of boils down to, I guess.
If we talk about a bit of map, V1 was StakeKit, staking, liquid staking. V2 is Yield.xyz. What next? What is a V3?
It's a good question. To be frank, we're seeing this is very future forward, I guess. But I think the convergence of AI and crypto is something that is much talked about, but we haven't really seen a lot of super interesting use cases delivered that are very broadly adopted. But to be frank, I think we have several AI projects building on top of our infrastructure and building agents that are yield generating agents. And there's some very, very cool deployments that we've seen. So from teams like Questflow, Hey Elsa, and others. We co-hosted a hackathon with Save, where we had multiple teams building applications on top of our API. And it's cool to see how you can essentially tell an agent find the optimal yield for me, right? And the agent will go out and they can even perform the entire end-to-end deposit flow, right? And there's other partners of ours such as Crossmint, which have actually built kind of like neobank stacks on top of or leveraging our infrastructure on the yield side. And agent flows where the agents can go out, they can buy items for you, but again, they can also go and invest the remaining capital for you. To be frank, I think we're getting into a sort of wealth front, but on crypto rails with this kind of agentic infrastructure. And so I think there's still very many kind of risk vectors that need to be accounted for, that you need to double click on, and that we need to I'm not sure if it's ready for prime time and everybody should immediately trust an agent to invest their entire portfolio. I think of course, like the adoption curve is sky high, but also like the improvement rate for AI at large is unbelievable. And so to be frank, I would not be surprised if over the next like year or two, we would see yield generation actually be taken on by an agent layer that sits on top of our API. Yeah, so you would have like an army of agents that would go out and like constantly optimize your portfolio for you, right? Of course, that yet again is really dependent to a large extent also on data, and like actually labeling risk parameters of the underlying strategies is pretty critical for the agents to be able to understand what are the yield generation mechanisms. Are there any, is there leverage in the equation? Are there any hidden risks? Are the contracts upgradable? Still quite a bit of work to be done also on the tooling side for these agents and on the data side. But I think V3 is probably pushing in that direction, and I think it's pretty cool because it's going to just be super automated and super seamless.
If we dream a bit, because I'm a true believer of the future of finance will be an hybridation between sci-fi, crypto space, TradFi, sci-fi, crypto space, and so on. Can we think that V4 of Yield.xyz will be an abstraction layer to offer the best of breed of yield between, I don't know, stocks, RWA, gold, Bitcoin yield, DeFi yield, staking, and so on?
Totally. Definitely. I mean, we're already seeing the convergence right now. I mean, if you just take a look at what Robinhood just announced here at ECC, right? I mean, we're at that point where TradFi and Web3 fully converge and converge super seamlessly. If you take a look at the UX of actually like trading stocks, like traditional stocks versus like trading crypto or on-chain real-world assets in Robinhood, it's the exact same, right? Like you wouldn't know. You also have like people like Larry Fink, like just like going out there and evangelizing that convergence of like bringing everything on chain and having a unified ledger where everything can be settled in real time, right? So I think the use cases that we in the industry have been preaching for so long, TradFi not only has kind of like, listened and has been convinced, I think they've been like they're now evangelists, right? And they're pushing for the adoption. So yeah, I totally believe that ultimately, any type of yield is going to be accessible through our API. It's all going to be on chain. And I think it's going to make everything, again, just accessible, right? Accessible, easy to use, and ultimately allow anybody to, make sure that they can get the best yield, that it's not stratified and only exclusively available for specific cohorts, but it's accessible for everybody. So we're pretty excited.
Great. Thanks for your time. Well, I think we succeed to cover all the details from the origin to the today product. What do you offer? What do you solve, and so on. If you try to wrap up your value proposal in one sentence, and you can use a normal, when I talk about you, I say you are the Uber of yield. You haven't any staking infrastructure, you haven't any DeFi protocol, you just connect people looking for a ride or yield to people proposing a ride or yield.
Yeah.
So if you can try to wrap up in a very simple sentence and maybe give also some numbers of volume you manage today, if it's public, and so on. And maybe you talk about Ledger, you talk about D-Block. And I think it would help also to see you're in a niche, you are under the hood.
Yeah, totally. That's an excellent analogy and very hard to top. But to be frank, I think just a very simple form would be all yields in one API, right? So that's really what we're trying to live up to. In terms of what we're doing, we do a lot of volume. We do north of 200 million in volume per month across staking and across DeFi yields. And yeah, so we work with Ledger, where we're the largest yield provider. We work with other hardware wallets such as Tangem. We have kind of like legacy Web3 clients such as Xerion, but we also work with neobanks such as D-Block, with channel partners such as Crossmint, with new types of wallets such as Infinex. So and I think we have a lot more announcements with more fintech and neobank clients coming out soon. But yeah, I think that more and more new players and legacy players are working with our infrastructure just because it's so easy to use. It's totally plug and play. It allows them to focus on what they do best. And ultimately, it's a way for them to very easily, seamlessly scale to wherever yields go and always be at the forefront.
I'm a wallet, I'm a dApp or whatever. How do you connect? How I can get started?
Just go to Yield.xyz, sign up for our dashboard, spin up some API keys and get building.
Great. Any word to end this episode?
No, super appreciate the invite. It's a pleasure to collaborate with you guys. Very excited to, collaborate a whole lot more. And also, again, just kind of like work together on the conversions of staking, DeFi, etc., and then just bring the world on chain.
Great. Thank you for your time. Very, very interesting. And talk to you soon.
Thank you very much.